A lot of people get confused on how they actually pay themselves from the LLC once it's established. Now, this is part 3 in my 5-part LLC Masterclass series, so please make sure you're subscribed to my channel to get the details on those other important pieces. But this is the critical part, right? How do I actually pay myself from an LLC? Once you've already set it up, this is kind of a critical question, right? I'm making money in this thing. How do I actually get paid? But let's get into it today. I'm Sorensen. Let's build wealth. All right, now the first thing I want you to think about is you are now an entrepreneur, okay? You're not getting a paycheck. We are not talking about enrolling and getting a paycheck cut every 2 weeks, all right? I'm gonna go through a number of different considerations that you need to have as you're paying yourself from your LLC. Now, the first thing you're gonna need to have is an LLC business checking account. All right, so we're gonna have our LLC, and let's say it's Vandalay Industries LLC, okay? And you've got your bank account that the LLC owns, all right? This is not you. You're gonna have your separate personal bank account. This is just your business bank checking account. You're receiving your income. This is your goods or services you're selling. This could be your rental property income, doesn't matter here, but the business has its own separate checking account. Great for tracking your income and expenses, but also critical here to make sure you're maintaining asset protection. What you're gonna do is you're gonna take a draw from the LLC business checking account to yourself personally. This can go to your personal bank account. This is all we're doing here. It might seem simple, but we're transferring money from the business checking account to your personal checking account. Now, how you tax report it here, we're gonna come to in a second. It depends on your structure. But for now, no matter what you're doing or how you're taxed, you're a sole proprietorship, you're an S corporation, we are simply transferring money from our business checking account to our personal account whenever there's income there and when we want. You could leave money in the business checking account for purposes of working capital, or you might need it to grow the business. And if you want money personally, you simply take a draw. Generally, we don't want to leave a lot of cash in the LLC business checking account. Don't accumulate cash there. It's a liability risk. You're conducting business there, or you might have tenants. They could sue the LLC and get at that cash. We only want to keep enough cash in the business checking account necessary for business operations. Otherwise, we want to send it down to you personally, get in your personal checking account, and from there, go out and invest and build and grow other assets, or use it for your personal expenses, whatever your scenario may be. But the bottom line here is you're going to simply do bank transfers to your personal checking account. Now, depending on how you're taxed is the tax reporting that's going to occur. Now, you simply have two different scenarios here. Typically, we're going to have you taxed as a sole proprietor, as a sole prop. This means this is just going on Schedule C, or maybe it's a rental property going on Schedule E, but you didn't do what's called an S election. If you're a sole prop, all you're going to do is this is a draw. You're going to track it that way in your QuickBooks or in your accounting or financials, and the money's going off the balance sheet of the company down to you as the owner of the company. Now, then at the end of the year, you're simply going to do your profit and loss for your sole proprietorship on Schedule C, or again on Schedule E for the rental property, and you file your taxes. No payroll reporting, no W-2s happening. This is simply self-employment income coming down on Schedule C for those of you selling goods or services, and this is the sole proprietorship. It's a lot simpler, and if you're making 10, 20 grand a year, this makes sense. This is a side hustle. Do the sole prop. Or even if those of you that have rental properties, again, you don't need an S election for this. It's just flowing down onto your personal 1040. We got the LLC for asset protection. It's not saving us taxes, but we are still having the business bank account and taking draws and transferring that money to us personally whenever we have the necessary cash flow or whenever we need it personally to live off of or make other investments. Now, if you are an S corporation, it's different, okay? We're still doing this same step up here where I have the LLC with its checking account at a bank, and this is a business checking account, and it is transferring to you personally. You're still doing that whenever you want, okay? We're still doing a transfer from the business checking account to your personal bank account, and this is still essentially a draw. Now, the big distinction here for those of you that are an S corporation is even though you're taking draws and transferring the money from the business account to your personal account whenever the heck you want, you're not necessarily doing a payroll and cutting yourself a paycheck and doing a withholding every 2 weeks, but you need to be doing at least a quarterly payroll. Okay, I have my own S corporation. This is what I do for mine. This is what many of our clients, the KQS lawyers that we're setting up, they're operating an LLC taxes an S corporation or that have an S corporation directly. You're doing a quarterly payroll. This is like a little after the facts payroll. Now, if you remember my second video in the 5-part series, I go over the S corporation and the payroll salary dividend split strategy. So go back to that video if you're understanding how much do I actually claim as payroll. For example, maybe you paid yourself $30,000 in draws that you took from the business, but only $10,000 of that are you going to consider to be wages or payroll income. That is the amount you're going to put on the quarterly. $10,000, maybe it's 15.3% self-employment tax. So I'm going to need to send in $1,500 in my self-employment tax for Medicare and Social Security. But the other $20K 100K that I took from the business, I'm deeming that to be profit or net income from the business. Again, exempt from self-employment tax, as I went over in the earlier video. But this is a critical step here, understanding that salary dividend split or salary net income split here, but making sure you're at least filing a quarterly payroll. And then at the end of the year, you're going to do a 940. That's an annual form. Now, your accountant will do this for you. If you have an accountant, they can do your payroll for you. You could use QuickBooks or ADP. Many of them understand this. I actually use ADP. We do an after the fact quarterly payroll like this for my own S-Corporation. Pretty seamless, easy strategy. Now, for those of you with LLCs, with rental real estate or other investment assets, don't do that S-Corporation. Don't file a quarterly. You don't need to do that, okay? You're just going to take draws to your personal bank account. Now, you may have estimated tax payments you're doing on a quarterly basis. This is different from payroll, okay? Your estimated tax payment is something you can send in the IRS every quarter. Let's say you're going to owe $100,000 in taxes at the end of the year from your business, your real estate, your other entrepreneurial activities, not from your W-2, because your W-2 is going to have payroll withholding. But if you're having estimated tax payments, 100K you expect for the year, you'd send in $25,000 to the IRS. That is a separate form from the 940 and the 941. That is your payroll stuff, okay? I'm just talking about estimated income tax payments that you could send to the IRS in the state. So don't forget about those. Make sure you're tracking what you're making. If you don't send in estimated tax payments, when you file your tax return at year end, you will have some penalties. Now, they're not substantial, but the IRS will make you pay some interest and penalty because you're paying in late. They expect you. If you made 100K, let's say in quarter one, they want a little bit of tax on that. Whatever the tax would be due, they want you to send that in an estimated amount. And as long as you're close, you're fine. There's no penalties or interest charge. Now, a lot of small business owners don't do that. Okay, I've been around long enough. They kind of send in money when they can and they true it up at year end, but realize you'll be paying a little bit of interest and penalty to go that route. The safe way is make sure you're sending in estimated tax payments. You don't get caught off guard, and you'll avoid having to deal with interest and penalties when you file your final return next year. Now, a good rule of thumb of how much to send the IRS each quarter is, let's say 30%. Whatever your net income after expenses is, just send the IRS 30%. If you're making good money, more than a couple $100,000 a year, you're going to at least be in a 30% plus tax bracket. All right, well, that's it here. As you're paying yourself from the LLC, it's mostly just going to be a transfer from one account to the other, going from the business account to your personal account. Remember, for any of you that are S corporations, you do have that quarterly payroll report. You do need to file to the IRS. You have some state unemployment stuff that needs to be filed. I just use a payroll company to handle that for you. Go make more money in your business. Don't be a bookkeeper on the side. All right, hire that out. Get your account or a payroll company to handle that for you. Now, please subscribe to my channel. This is part 3 of the 5-part LLC Masterclass series, where I'm going over the LLC and how you can use it to your benefit. I've also got a lot of videos on my channel on saving taxes, protecting assets, and building wealth. I'm Matt Sorensen. We'll see you next time.